before joining a prop trading firm? What would be some red flags?
Some people that are watching this video are not going to be very happy with the insights I'm giving, but investments and safe don't go well together in the same sentence. One of the best ways to analyze the market is to, I'm going to be very harsh, they use it the completely wrong way. What's coming? This year, we're living unprecedented times. What does it take to be a long-term trader in the market?
Welcome to the podcast show by The Trading Pit, where we explore insights from the trading world. Today, we're honored to have Mr. Andrew with us, whose profound expertise in business growth and market analysis, combined with his practical experience in the trading sector, positions him as a key voice in understanding the financial markets. That's quite an intro. Andrew,
That is quite an intro.
Welcome to the podcast show.
Thank you so much for having me, first of all, and congratulations for catching me, because it's one of the very few times when I'm actually on the guest seat.
Yeah, I think we've scheduled this for a month now, right? To get you in. Right, so first things first, I saw a nice video that you posted on LinkedIn yesterday, showing yourself to the world. I'm sure anyone listening would like to know who you are before we get into the questions about the market. So just briefly, a few words about yourself and how did your career begin in the financial markets?
Absolutely. So I'm Andrew Mreana. I'm a finance professional with 14 years of experience. I started in 2011 in the era of options, if anyone remembers. And slowly but surely, I transitioned from a trainee stage to the CEO stage. I went through almost all positions in a financial firm within 14 years of my career.
Great. So that's definitely some experience. So I guess there must be some pivotal moment in your career that shaped and pushed you towards business growth in the trading industry. Could you just touch on that briefly?
Yeah, absolutely. Now, one of the hardest moments, basically, was when I opened my own business. Because in 2019, I decided to take a step back from being an employee and being on sales floors of Forex companies. And that's when I started my own call center, my own academy back then. And that was a very interesting point in my career.
How long into your career was that? Was that like...
About a decade into my career.
Okay. So we shared a panel actually in the Expo in Limassol about prop trading. And I know that you have a good understanding in depth about prop trading overall. So for anyone listening, could you please explain the differences that you see between prop trading and the retail broker space?
Absolutely. At a first glance, and to keep it in layman's terms, basically in prop trading, you're using the company's funds, while in retail trading, you're using your own funds. This is like, to explain it in one sentence. So traders join Forex companies, usually starting a career in trading. People always wanted to make money. There's no doubt about it. And they start by investing themselves. Once they get to a certain stage, once they get to a certain experience, they can try and manage funds, basically, the company funds.
Okay, so I can jump on that actually, because this is the broader understanding about prop trading where a trader gets access to the company's funds. If you actually look into it, you don't actually get access to the company's funds. I think it's more like, because in order to manage someone's funds, you have to have an asset management license, which very few people have that are working in the hedge fund industry. So I think prop trading is more of like proving your trading strategy through the challenges. And then the company takes the decision whether they would like to copy your trades or not with their own funds. So by managing the company's funds, we mean that you provide your trading strategy, and then the company has the final say, let's say, of copying your trades onto their funds.
Yeah, you're not a fund manager.
Exactly.
You're like an
strategy provider.
External consultant, let's call it, of the company that has a strategy, that has experience, that has an expertise, that has been proven to work over years. And then the company uses your skills and knowledge in their funds.
Exactly. Yeah. How do these elements play into your strategies for business growth and risk management? Because I'm guessing it must be a bit different for business growth within a prop firm than with a retail broker.
Well, some people would agree, some people would disagree. To me, it's growing a business is the same thing. As long as you have an understanding of the business, a bit of experience with that business, you can grow a business. The game doesn't change, the rules do. So This is basically how I see it. For me, it's not a huge challenge as long as it's the instrument itself is related to what I'm used to.
We've seen some big brokers starting to shift towards prop trading recently. What's your opinion on that? Do you think more big brokers are going to shift towards prop trading?
I would be surprised if they don't. And I am surprised that it took them so long. Because if we look at it from the outside, the prop trading world doesn't have a strong regulation. So the closest to a professional trading environment, yeah, is the FX CFDs firm. So it only makes sense for these companies to offer an additional service to their clients.
Do you think that forex brokers at the moment see prop trading as a competitor stealing their clients?
They see it probably as a cash cow and the newest trend on the market. And we all know that something new will attract a lot of attention. So if they keep the same goal they had when they opened the FXCFD firm and they just treat prop trading as an additional service, then I think we're good with it. If prop trading is just seen as the new hot thing and as a cash cow, then we expect the regulation to step in and take measures if the measures are required.
So let's get it more technical. This is your time to tell us about your analysis about 2024. So I'm guessing that you've done some analysis about how you expect the markets to play out for volatile instruments like Bitcoin, maybe gold. Can you give us your thoughts on that?
Absolutely. I had a look at the charts this morning. It's a habit of mine to see what's happening with the markets. Now, before we get into very deep answers, I would like to give you a very simple answer. As a trader, one of the best ways to analyze the market is to understand the big picture. Okay. And I think everyone agrees that this year we're living unprecedented times on a global level. The geopolitical tensions are probably at the highest level we had in over 20, 30 years. So as long as we understand the bigger picture, then we can do some analysis of sorts that would give us an indication. Now, this might happen or might not happen, but if we understand the bigger picture, then the odds will be in our favor.
Do you think that this is a question of mine usually when the markets are very volatile, do you think there's like a safe way to trade during such uncertain times, or should people just stay away if the market is very volatile?
The words investments and safe don't go well together in the same sentence. And this is 14 years of experience speaking. However, you need volatility. Okay, volatility is what brings opportunity, and opportunity is what makes you the money at the end of the day, if you're alive, or if you really know what's going on. Now, talking about geopolitical situations, let's take crude oil, for example. We know where crude oil comes from. And we know the tensions in that region right now. Oil is based on supply and demand. And every commodity, let's say, has a certain, I like to call it comfort zone, where it likes to hover. For example, if we look at crude oil, we see it hovering between 65 and 85. So we're looking at roughly $20. As long as we understand the safe zone, not the safe zone, the comfort zone of the asset, then we can swing trade. If we look at crude oil charts, we're going to see crude oil pulling back from the beginning of the year. And recently we started seeing corrections. It's currently trading at, 65, 70, if I'm not mistaken. So we can mark the comfort zone. So we expect it to trade between 65 and 80, let's say, as traders, knowing that this is its comfort zone. So our trades will happen somewhere there in that level. If we take the US dollar, for example, we know gold is at its highest levels ever. Therefore, the US dollar should trade a bit lower. We know the correlation, the negative correlation between the US dollar and gold. We know that in times like this, especially, gold becomes a safe haven and everyone keeps chasing it, therefore the price. The US dollar. Let's try and understand the political implications and the pressure on the US dollar, again, considering the geopolitical tensions. Okay. It's difficult in times like this to see the national currency thriving. Okay, because the US has a lot of cost right now and has a lot of pressure right now. Say in Europe, if we have a look at the euro, again, we're going to see trading a bit lower than usual. due to, again, the geopolitical tensions in Europe. Europe doesn't only have a war knocking at its doors, it also has a huge influx of migration and immigration. Everyone needs to be accommodated. Therefore, it's a huge pressure on the currency. So, in times like this, people tend to focus more, or some traders tend to focus more on what is a bit more transparent, like commodities, for example. Yeah, food. Okay, people need food regardless of the geopolitical tensions in the world. So we look at the food cost. Yeah, we know that food is more difficult to get right now. Yeah, unless we're all being fooled by the supermarkets, we're gonna see that the food costs double.
Yeah, and inflation.
Yeah, they say inflation is up by 10-20%. Actually, on the shelf, on many products, we see a doubling in the price. So once you understand the bigger picture and the geopolitical tensions, you can kind of predict what will move. And again, we don't need a quiet market. If the market would be quiet, no one would make money. From investment banks to retail traders, we would have no volatility and no opportunities to make money. So again, these are the assets that are heavily impacted, but also look at commodities, look at food, guys, and we can see the food cost and we can see the reaction, yeah, of commodities, yeah, grains, for example, even coffee, even chocolate. We can see the reaction in times like this.
Yeah, I think this goes back to how important it is for a trader to be up to date with the news, right? To know what's going on, not just in his region, but the region from which his traded instrument is mostly affected by. So I don't know, for example, when we had the war in Ukraine, what happened then, like with the markets?
It's still ongoing, and this is one. Yeah, that's why I mentioned grains. Yeah, there was an issue, and I think there is still an issue with Ukraine exporting their grains into Europe. You know, they have to do it. Yeah, it's a lot of food basically that doesn't have to rot. It has to get to people. It has to be able to feed the people. Yeah, and we can see the impact in the media.
Something more recent now about the war in Palestine. What have you seen being affected by that?
Well, it's again, the pressure is all over the standard currencies and the standard asset classes. Yeah, because you have companies in that region listed on the stock exchange. You have companies that have their headquarters there. It's becoming, for some companies, it's becoming very difficult to do business. For some companies, it's a gift basically from God. I'm not saying it's a good thing, but this is how business works. You always have to take an opportunity that arises. That opportunity could be good or bad. It's your job as a business to grab it.
So do you think that the average trader would actually be happy when there's crazy volatility, or would you be surprised?
In terms of volatility, yes, volatility brings a smile on traders' faces, because that's when the market has an opportunity to change a trend. For example, you mentioned news a couple of minutes ago. It's good to know that the news impacts the market on a short term. Yeah, depending on the severity of the news. Yeah, if the news is severe, like wars and stuff like that, then we might see a change of trend. If things that were bullish, yeah, for 6 months or a year, now they could turn bearish for 6 months or a year. But in general, the news shake off the market on the short term. The trend, if it's a healthy trend, it tends to stay the same. Yeah, so with news, we're going to see the usual corrections. We're going to see the usual, the aggressive pullbacks, yeah, or breakouts that we can see on the charts. But we need to take a step back, zoom out, and look at the bigger picture. There's something bigger always behind the news that was released. There's another news much bigger with much more impact than this news.
We have the saying, when in doubt, zoom out, right? So going back to business development, building on your extensive experience in business development, what strategies would you recommend for businesses aiming to grow their brand and expand their market presence in today's highly competitive environment? I'm asking for a friend.
Yes, I don't need to. Now, it's a very good question. It's not a secret formula. It takes a lot of factors to be successful in today's era. Just, I'm on the market. So to give you a short answer, just take me on board. I don't want to have to do. But elaborate a bit. Um, One of the most important things when it comes to growth is believing in the product, having a viable product, getting involved in that product. What, let's say, makes me successful when I boost businesses is that I get involved with my heart. Okay. I don't necessarily do it for the money, or I don't always do it for the money. If the product is solid, if I truly believe in that product, I truly believe that product has to be shown to the people. Therefore, I'm going to push as much as I can to make people understand the product. So I know a lot of marketing strategies are the same because it is what it is. I mean, you have to tick the boxes in terms of marketing, but people can tell if the marketing is going the extra mile. Yeah, and now I can give you some insights. Maybe some people that are watching this video are not going to be very happy with the insights I'm giving, but I've noticed some companies, for example, hiring actors, yeah, paid actors for various reasons doing marketing.
Cost effective, mostly, I think, to not have an in-house marketing team.
But you need an in-house marketing team. You need the people in your company to believe in your product and to be able to pass their beliefs to the viewers. An actor can say whatever because he's paid. He will say the sentence and it's fine. You have to go the extra mile. If you don't go the extra mile, then you're just going to be one of the many companies that spend the same marketing budget in the same way, yeah, on the same funnels, and with the same results at the end of the day.
Yeah, and I think having an in-house marketing team can also boost creativity, right? Because when you have an actor, he's waiting for you to give him the requirements.
Yeah.
Shoot it out there. So if you have an in-house marketing team, they could come up with ideas. You could brainstorm. You could actually put out multiple types of content for that one idea that you had as a manager.
Absolutely. And to give you another example, I've been told last week, I had chats with some C-level executives, and one of them surprised me. And they said, right, since ChatGPT, since we have the AI, we don't need marketing anymore. Anyone in the company can post. In theory, yes. But if we dive a bit deeper into marketing and marketing requirements, yeah, stuff like consistency, stuff like changes in the algorithm. Yeah, these changes in the marketing algorithms of YouTube, yeah, Google, Yahoo, they change maybe once a month, maybe every 2-3 months, something changes. If you're not aware of that, it's not going to work. You're just going to be one of the many that just throw darts without having a bullseye. You just throw darts to a wall. The whole point in marketing is throwing the dart to the bullseye.
I think also with, you mentioned AI, if you rely on AI to give you ideas about marketing, at the end of the day, what values do you have as a company and what mission or vision do you want to put out there? Because, okay, I guess you can build a profile now with the GPTs and actually get it to give you consistent ideas. But something that we had the discussion with recently with our design team was that in order to produce a design, the client needs to know what she wants. And the problem with GPT that everybody thinks it's working by itself autonomously is if you don't give it the correct prompting, then you're not going to get the desired result. And people watching will notice the inconsistency between your posting. So that's another plus side, I think, for having an in-house marketing team. We have a team of 7, I think now. That's, yeah, they're always around the clock trying to post on all different social media channels. And an idea that comes to the marketing team never stays the same. It's always takes their little twist to it and it goes out towards our client base.
Marketing is a heavy thing. Marketing is not that easy. I mean, okay, I studied marketing in uni, you learn the basics, but now what? What happens from there? You always got to think outside the box. You always need to go the extra mile. And this is what brings business, going the extra mile, nurturing the clients, being transparent as much as you can with your clients, helping smaller companies, even if you're not down there anymore. You were there as a company at some point, and you need to help to get business.
So we touched a bit on AI about marketing. I'm guessing there must be some things affecting trading now with AI, right? So have you seen anything come around in terms of tools, in terms of how people use AI in their trading strategies?
Yes, and the answer is very short. They use it the completely wrong way. I'm going to be very harsh on this one. There are a lot of fake bots, magic bots on social media. There are a lot of marketing campaigns promoting trading with AI. If you're not willing to let a human do it for you with 20 years of experience, are you willing to let an algorithm do it for you with what, 3 years, 4 years of experience? Because if we look at it, ChatGPT was born a few years ago.
Yeah, and I think this is where we've seen a lot of people get scammed now in trading because of these bots. People are just creating a bot that works maybe for the short term, for a couple of weeks, but then they keep selling it for months. And just by doing a good marketing campaign, people trust them, and they go and they buy these bots. And this is why we actually we allow trading with bots in the trading pit as long as you built the bot in the EA. So if you go along and buy a bot or an EA from somebody else and you bring it in, we will notice, and it won't be accepted. So yeah, just a quick note, be careful if you're buying any bots or EAs from people. Do some due diligence to find out who created it, based on what, because I could create a bot tomorrow and say, hey, buy this and make 100% profits. If I market it well, I'm probably going to sell a lot of it.
Now, one of the issues with the trading robots is that, yes, they do exist for a very long time. They are used by the big banks and the big trading firms around the world. They have tens of years of track record. For a robot to be able to be trusted, let's say, with huge amounts, you need years of track record. That robot is educated based on the market conditions. So what happens if you have a very young robot, that never encountered those situations? How are they going to react? Because this is the biggest problem. You can teach a robot how to react on day-to-day stuff. Even then, it might get it wrong time to time, but let's say 90% of the times it's going to get it right. But the question is, what do you do when there's a situation on the market that we have never seen before?
Like even with news, like we were saying before. So if you don't adjust the bot accordingly, then it's not going to work.
So bots need years of track record. 1, 2, 3 years of track record is not enough to be used by a financial institution.
And maintenance, of course.
Absolutely.
So I'd like to touch on the customer support side a bit now, because I worked very closely with our customer support team, and I noticed that in prop trading, what really stands out to traders is how accessible your team is to help them out, not just with like a random question about the product, but just also in real time. If they're facing an issue, we've seen some prop trading firms shut down. So as soon as something goes wrong, man, we get so many messages and people coming through. What's going on? Is your company going down? And it's truly sad to see, because we're trying to build this company for the long term, as you know. So it's a shame to see that so many clients have gotten, let's say, shook by the industry, and that as soon as something small might go wrong, the first thing that pops in their mind is, oh my God, what's going wrong with the company? So I think it's super important. I'd like to know your opinion on customer support and how accessible we make it in AI as well.
Customer support is, or customer nurturing, if I may, is maybe 50% of the business, looking after your clients. Onboarding a client, B2B or B2C, let's say it's much easier than retaining that client. Okay, so customer support comes first after your product, basically, and your sales team. It's super important.
Marketing can do up to a certain level, because if they bring the client in and you don't maintain him the correct way, you don't treat him well, you don't answer him in time, then he's just gonna leave and go somewhere else where somebody actually cares about him.
Yeah, you would be surprised to find out, maybe not, that a lot of businesses, like most businesses, have a turnover in terms of B2B, just like they have a turnover in terms of staff, basically. Nurture your client, maintain the relationship with the client, make sure your client knows ahead what's going to happen, what you're going to do as a company. And if, for example, touch wood, there's any downtime, if you're using the product that might have downtime here and there, make sure everyone is well notified, if possible, before it happens. And nurture your clients. Your clients are the biggest asset. Without clients, you have no company, no employees, no nothing. Nurture the clients is one of the most important things.
Personally, I've invested a lot of time into Discord, which is like a community server where we try to update clients and get them talking between themselves, because you'd be amazed as to how many people are willing to help the community. So I answered a couple of questions to a couple of traders in our channel, and then the next day, new traders came in, they had the same question, and they were just discussing amongst themselves. And you can also get a lot of answers from the servers themselves. If you just monitor the discussion, you'll understand what they care about, what they don't like, what they like, what you should change. And I think they really appreciate this immediate interaction with the team. That's one of the biggest things I think that prop trading firms have focused on and should focus on is the community building for their growth. I'd like to know your thoughts about growth within maybe just trading business overall or prop trading if you think it's any different. What's your thoughts?
No, as I told you in the beginning, the rules change, the game stays the same. Yeah, we're still talking about financial instruments. We're still talking about financial firms. We're still talking about trading. It's in essence the same thing. But if you give attention to these particularities, let's say like client nurturing, yeah, going the extra mile, understanding your client's needs, taking feedback from the client, not one, not two, but communities and accepting their feedback, it will only drive you forward.
What do you think a trader should be looking at for before joining a prop trading firm? What would be some red flags or some key points to look at when choosing a prop firm?
That's a good question, considering there's no regulation. Do your homework. Now, in my humble opinion, people that go to prop trading firms already have a minimal understanding of the industry, how it works. So they should be equipped with a bit more knowledge than a newcomer, yeah, that just starts trading. So understand where is the company coming from, who's behind the company. It's just like crypto at the end of the day. Understand who's behind it, understand the long goal, understand most importantly the liquidity pool. Like I always say when I speak publicly about prop trading, check their liquidity pool. Is there any way they can make that public? Is there any way you can find out that information? If the company does not have the proof of a liquidity pool, I would see it as a red flag.
Just so you know, also the lifetime of the company. Because I think one of the biggest questions in prop trading now is what happens if too many people get paid out? Because traders have this idea that if traders get paid out, the company is losing money. That might be the case in many prop firms, but that's not the end goal of a serious prop firm. A serious prop firm wants to actually benefit from the profitable traders by copying, as we said at the beginning, their strategies. So one of the things that we always tell traders is you don't have to come to the trading pit, but do your due diligence on the background of the company, who's behind it, as you said, liquidity. Can they sustain? Can they understand the data and the strategies that you're providing and actually benefit from it? Or are they just going head to head with you, hoping that you don't make the profits?
The difference between nowadays and 15 years ago, 14 years ago, is that we have 14 years of track record in the industry. Yeah, 15 years ago when it came to Europe, when Forex trading and CFD trading came to Europe, it was just like prop trading is now. Something new, something that gave people an opportunity, at least in theory, to make some money or supplement their income. Now, we have that track record. If people do a bit of research, they understand what happened in the last 15 years. They understand how to recognize a dodgy company, from a legit company. 15 years ago, we didn't have this luxury, of having all this information. Also, times change, people change, the goal stays the same. Take advantage of the people that went into this business way before you. Learn from their mistakes. Don't focus on the success stories because everyone can, everyone is proud when they make $1 million. Don't focus on the success stories. Focus on what does it take to be a long-term trader in the market, regardless of your goal. Short-term trade, long-term trading, scalping. It doesn't matter what strategy you had. Your goal will be to make money, for some time until you can retire, hopefully.
You were mentioning about brokers, which is very interesting. How many years you were back to see it back then? How many years did it take to actually weed out the bad actors? Was it like a couple of years regulation? How did it come around?
Yes, when I started, there was regulation in the financial sector in Europe, but it was very permissive, let's say. Now, like in aviation, history is written with blood. Okay, so now we have that track record. We have a lot of people that literally gave their blood for us to learn something and understand something and learn from their mistakes. If we repeat what they did 15 years ago or 14 years ago, when the product was new, no one actually knew a lot about it, and we rush into things, we might have the same results. Again, the industry changed, and I'm pleased that the industry changed over years and it became less permissive. more focused on compliance, more focused on the best benefit of the trader. Yeah, at the end of the day. Um, and if in the beginning this benefit was split between the company and the trader, as time went by, the focus became more on the trader and the people in general to be happier with these sort of investments.
I mean, as it should be, right? We mentioned before, and without your clients, you're nothing. So if you don't take care of the client and also his safety, let's say, because at the end of the day, people are spending their hard-earned money
Yeah.
and time to actually try and trade the markets and make profits out of it.
So realistic expectations are very important. Now, long are the days when you can make 100K with 1,000 investment. Maybe that was possible when cryptos first came out, when the volatility was insane in cryptos, where we saw changes of 100% a day, 500% a day, 1,000% a day.
Yeah, but then again, could you actually predict that movement, or was it mostly?
No,
luck? It was mostly luck and just like
it's a gamble.
Yeah.
Now these days, I see a lot of meme coins thriving, and I get texts and push notifications on my phone that this meme coin went up 80%. This meme coin went up 100%. No one can predict that unless you actually follow that coin from when it was born, day by day.
I know again who's behind it, what the goal is.
Exactly. The goal is to, I mean, for every coin, like every stock, basically, listed, every company listed on the stock market, their goal is to give value to, and to take the value higher and higher and higher.
Do you have a crypto portfolio?
Of course I do.
Yeah.
Of course I do. I wouldn't be here. Honestly, I would be embarrassed to talk about the industry if I wouldn't have investments. And I know a lot of people, off the record speaking, that speak publicly, but they don't have a penny invested.
So you recently parted ways with C-Trader, where you were the former head of growth. So I think we want to know what's next for Andrew. What's where are you looking at now?
Yes, I did. I parted ways with C-Trader. It was almost a year of hard work. It was probably one of my best years in my career, and I still am very proud that I was trusted with such an amazing product. I had a mission with C-Trader when I joined them. My mission was completed at the time of my departure. We're still in good relationships, and hopefully we're going to keep doing business over the years, one way or another. If not as a part of the company, as an external consultant or something else.
Would you be looking into prop trading, broker, just anything?
Absolutely. I mean, I had an academy and I ran a brokerage in the past. This is my bread and butter, basically. That's where it all started. I'm very intrigued by prop trading. I would love to run it. And the prop trading, again, off the record, the prop trading model is not new. I knew the prop trading model for the last 20 years almost. And I always had a thing in my head. What if we could do what the Americans are doing and use, my money or someone's money to trade with, and not to open companies to attract people to trade, to invest in you, but to purely trade the markets day in, day out. I'm open to any ideas. I'm open to any collaborations, basically, and I'm well-versed in the industry.
Something final, we'd like your reflections on how the landscape of trading is evolving and how traders can be better equipped to handle future challenges. We talked a bit about AI. I don't know if that's affecting, but what do you see coming?
People will always want to make money and they will always look for opportunities. Now, luckily, the stock market, CFDs, cryptocurrencies, and real estate and many other things, but these in particular offer this opportunity to almost anyone. As long as you have, half a brain there, as long as you have a monthly paycheck, and a desire to make more money, you will always have this opportunity. As I said many times, and I will say it every time I get the chance, the rules of the game change all the time, but the game stays the same. Now people are, in my view, equipped with way more knowledge than they had in the past. We have way more case studies that they can get inspiration from, let's say. We're living unprecedented times again. We see tremendous volatility sometimes, and volatility is what brings the opportunity. No trader ever wants a quiet market. So even though we see some small players of the market, shutting down time to time, The big players will always be there. The stock market will always be there. The crypto market will always be there from now on. I'm not so sure about the fiat money, but for the few years to come, I'm positive we're still going to have fiat money. So the opportunities are there. It's just a matter of learning about one, if you cannot learn about all of them, and have realistic expectations and just go for the money, take the money.
And do your due diligence always.
Absolutely.
Yeah.
Absolutely.
Okay, well, then this has been amazing. Thank you, Andrew, for your time and sharing your invaluable experience with us.
Thank you so much for having me. Again, great pleasure. One of the very few times when I'm on the guest seat, I seem to enjoy it.
Well, you should do more of it. Maybe we can arrange a round too.
Anytime you want. We can even do a series if you want. You know, I'm open.
To our audience listening and watching, thank you for watching. Make sure to subscribe, like, and follow our channels for another great interview, maybe with Mr. Andrew.
Thank you so much for having me.